Next question. Following particulars relating to the Vishnu Fund Scheme is given to us. Investment in shares at cost in pharmaceutical companies 79 crore, in construction companies 31 crore, service sector company 56 crore, IT sector companies 34 crore, real estate company 10 crore. Investment in bond fixed income, listed bonds an amount of 12 crore, 8,000 bond at the rate of rupees 15,000 each. Then unlisted bond, that is 7 crore. Number of units outstanding is 4.2 crore. Expenses payable 3.5 crore. Cash and cash equivalent is 1.5 crore. Market expectation on listed bonds, that is the discounting rate is given 8.842 percentage. Particulars relating to the each sector are as follows. Sector information is given: pharma, construction, service sector, IT, real estate. Index value is given, the date on which we had purchased it and on the valuation date. The fund has incurred the following expenses: consultancy and management fees of 480 lakhs, office expenses 150 lakhs, advertisement expenses 38 lakhs. You are required to calculate the following. First question: net asset value of the fund. Second, asset value per unit. Third question: if the period of the consideration is 2 years and the fund had distributed rupees 3 per year as cash dividend, ascertain net annual return. That is the question. I request all of you to give answer for the first and second part of the question in the chat box. First and second question. Let us have understanding how to make the calculation of answer. Investment is made in the pharmaceutical companies 79. You can see that the question is providing the information that for pharmaceutical company the index was 260 when we purchased it. So divide by 260 and it is right now 465. So multiply with 465. That is the way it is supposed to be revalued. Similarly, we are required to do revaluation for the other investments: pharmaceutical, construction, service sector, IT and real estate. For these five so the investments, we are required to do revaluation like this. Just be, that is the conscious to some extent, because number of times the sequence in which this information is given and the sequence in which the index is given may have some reshuffling. So just be slightly careful, not a conceptual point. As far as the listed bonds is concerned, in that, say, you can use your calculator to do revaluation. This is 12 into 14 percentage. This is the interest income which investor is going to receive, divided by 8.842 percentage. With that, say, it is supposed to be revalued. For unlisted bond, nothing is given. That's the book value itself is the market value. That is the price at which we had purchased it itself is the value that would be prevailing right now. Because over here, so clear information is given that this is for the listed bonds. This is the way the net asset can be calculated, divided by the number of units. Sorry, minus so the expenses payable 3.5. That is the way the net asset will be found, divided by the number of units. So will give the net asset value, and there is a cash balance also. So number of units that we are supposed to consider last, valuation of the investment, then the cash and cash equivalent minus expenses payable will give the net asset divided by number of units. Heading right down, calculation of net assets and net asset value per unit. particulars and answer. Investment in pharmaceutical companies in that amount of investment is 79 crore divided by 465 divided by 260. So use a calculator. 79 into 465 upon 260. So it is 141.288. Similarly for the next one, construction, 31 was the investment divided by 210 into 450. So investment in construction companies, in that it is 31 crore into 450 upon 210. 66.429. Next, service sector companies, in that 56 into 275, sorry, into 480 divided by 275. 56 crore into 480 divided by 275. It is 97.745. Next is IT sector companies. In that it is 34 crore 495 divided by 240. 34 into 495 divided by 240. That is 70.125. Next is real estate companies. 10 into 410 upon 255. So 16.078. Next is investment in listed bonds. In that 12 crore into 14% divided by this. 12 crore into 14% divided by 8.842 percentage. So 12 into 14% divided by 8.842 percentage. So it is 19 crore. Next, Unlisted bond 7 crore. In that, no information is given, so book value and market value assumed to be same. That is, so the price at which we had purchased it and the current price, that is 7 crore. Okay. Then expenses payable 3.5 crore. Next is the cash balance. That is cash and cash equivalent. It is 1.5 crore. This is the way the net asset will be found. Divided by number of units, it is 4.2 crore. And lastly, net asset value per unit. This is what we are required to find. Just giving explanation of this portion once again. Valuation of the investment in the listed bonds. See, the investors required rate of return is 8.842%. So what happens at investment and income? As an investor, when I am investing 100 rupees, I require the return of 100 into 8.842%. That is 8.842 is the income, say, which I am going to get. That is which that is expect. As far as these bonds are concerned, in that 12 crore is the face value and 14% is the rate of interest. So what happens at over here, 12 crore into 14%. For these, like the bonds, the interest income to the mutual fund, okay, investor, 12 crore into 14%. It is 1.68 crore. So this is the value of the investment. In a way that, say, if at all we sell this investment in the market, this is the value that we can get. So 1.68 crore into 100 divided by 8.842. That comes to 19 crore. This is the way the valuation can be made. Friends, over here importantly, the information which they have provided of this 480 lakhs, 150 lakhs, 38 lakhs, we make an assumption that all those expenses have already been paid, and then we have been provided with this closing cash balance. That is the reason, say, we just have to ignore it. So let us see how to calculate the NAV per unit. 141.288 plus 66.429 plus 97.745 plus 70.125 plus 16.078 plus 19 plus 7 minus 3.5 plus 1.5. So that comes to net asset of 415.665. Divided by 4.2 crore, that comes to 98.9678. 98.9678. This is the net asset value rupees per unit. So it is 415.665 crore divided by 20 crore. Sorry, 4.2 crore. That will give us net asset value per unit. Now, third part of the question. The question says that if the period of the consideration is 2 years and the fund distributed 3 rupees per year as cash dividend, ascertain net return in annualized term. Means over here we are required to make the computation that say what is the return that the investor is able to get for holding the investment for 2 years. That is a question. Everybody is requested to pay attention over here. Slightly it is a new question for us. 3 rupees is the dividend for the first year, 3 rupees is the dividend for the second year, plus 98.9678. This is what's the NAV at the end of the 2 years. That is what we have computed over here. Minus say the purchase price of the unit. Now friends, over here, what must be the price at which the unit was purchased? For that, so the institute has given a kind of calculation like this. Everybody is requested to pay attention. The kind of calculation which institute has suggested to compute the purchase price of the unit. Use a calculator. 79 plus 31 plus 56 plus 34 plus 10 plus 12 plus 7. In a way, that's the 229 crore divided by 4.2, that comes to 54.5238. This is the way the purchase price is calculated. In a way, that's before 2 years, whatever the investors had made investment, with that these investments had been made, and with that the NAV per unit is calculated as a purchase price for the purpose of return calculation. That's it. Over here we can say that basically the sufficient information is not given with which we can compute that the price at which the unit was purchased before 2 years. That is the reason the institute has given suggested answer like this. So over here minus 54.5238. So this is the capital appreciation of the unit. This is the dividend income divided by 54.5238 into 100. That is to get the answer in percentage term, into 1 by 2. So getting the answer in the annualized term. This is the way, so the annualized return is required to be calculated. This is what we understand. Please write an answer. For the third question, working note number 1, calculation of purchase price of unit, comma, before 2 years. In that, investment divided by units. Assuming that all these investments have been made before 2 years. So here we'll make the total of all this. Investment in shares, investment in bond, that is the way. Investment in shares plus investment in bond divided by number of units. So 79, 31, 56, 34, 10. +79 plus 31 plus 56 plus 34 plus 10 plus 12 plus 7 divided by 4.2 crore. So 210 crore plus 19 crore divided by 4.2 crore. So 54.5238. Rupees per unit. This is the purchase price. And next is annualized return. In that it is income upon investment into 100 into 1 divided by n. What is dividend income? 3 rupees for 2 years plus 98.9678. 54.5238 whole divided by 54.5238 into 100 for getting answer in percentage term into 1 divided by 2 years. So this is 6 rupees plus 98.9678 minus 54.5238. So 44.444 divided by 54.5238 into 100 into 1 by 2 because the time period is 2 years. So plus 6 divided by 54.5238. So 92.52 percentage. That is 46.26 percentage. This is the way the annualized return can be calculated. Summary of the answer. In the first part of the question, we have to find the net asset and net asset value per unit. That is, investment is made in the equity shares, index valuation on that date of investment, and the current value is given of index. So we understand that so the proportionately value must have changed. Investment in listed bond, for that so we are required to consider the interest income divided by the discounting rate. Unlisted bond, there is no change. Expenses payable and cash balance as it is. Whatever the expenses which are given to us in the question, it is assumed to be paid and then the closing balance is there. So we are ignoring the expenses information. Net asset upon number of units is net asset value per unit. Then assuming that say the investment was made before 2 years, so as per the given information, and at that point of time, so the net asset would be equal to say only the amount of the investment. We make the computation of the NAV per unit before 2 years. And we are assuming that say all the expenses which are provided to us, that is example, that has been paid out of the income that the mutual fund has received. So the investment divided by number of units. So the price at which it was purchased was 54.52. The current price is 98. So the difference of both of them is 44. So 44 rupees is the capital appreciation plus 6 rupees is the dividend income. That is the way the total income is calculated, divided by the investment 54.52. That is the way we get the return over the time period of 2 years, 92.52, and dividing the same by 2, we get the annualized return.